Assalamu alaikum. Today is 27th June 2025, and we are going to be exploring an interesting concept that will build the continuation of the playlist. This is beginning of a new series, and the series is based on an understanding. I'll give you an introduction or a demo in this first video, and then we will go further and look and explore and try to understand this concept in detail that we will use in future to base our trades on. Anyway, so I've taken this segment out of Jim Dalton's book, Market Profile, Understanding something Markets and Profile, I think is the name. So he uses a very interesting concept. He says there are long-term sellers and there are long-term buyers. This seller here, for example, suppose there's a car seller. This is the car manufacturer. This is GMC. These guys build the cars and they sell the cars. These guys are long-term sellers. They're going to be in this business of GMC cars selling for like quite some time because they are the manufacturers themselves. And customers are the long-term buyers because they're going to be holding the car for quite a long period. So neither one of them is in a rush. The one who is in a rush is the dealer. He buys from the seller and sells it to the customer, right? And if, for example, the manufacturer's lot gets affected, or if, for example, some news came out or something happened, tariff was imposed and cars are not being sold or anything, the seller he will make a loss, but he will not go into a desperate mode. He will not run into immediate desperation. A dealer, on the other hand, makes his living out of flipping the cars, buying from the seller and selling it to the customer. If, for example, he buys 50 cars from the manufacturer and he can't sell 30 of those, he's making a huge loss. He's in desperation, so he's either going to cut prices, he's going to make extreme moves to get the cars off of his hands. If there is a faulty part in the car, the seller can change, but a dealer, on the other hand, might be stuck with that faulty part lot. X number of things can happen. So a desperation always comes from the short-term participant, dealer in this case. Desperation never comes from the customer or the seller. They might be making profit, they might be making loss, but desperation comes from the dealer. And a market moves when there is either fear or greed, when there is desperation. So this is the idea that we are trying to capitalize on trying to play the dealer. If suppose any stock has a lot of institutional participation, we're going to say that a stock like Adobe, for example, it has an institutional ownership of 83%. So out of 100%, 83% of the stocks are owned by big institutions. So we can call them long-term participants, long-term sellers. They're not in the immediate rush to sell the stock. And dealers are retail traders. For example, stocks with low institutional ownership, 49%. So Tesla, and you can see Tesla makes very big moves, let's look at weekly, very scared moves. A rally from 175 to 500, drops back to 200, jumps up to 360. So this is giving you big moves. The dealer moves are showing you desperation. Why? Because these guys cannot hold the stock for very long. They are, how do I explain it? They cannot hold drawdowns for very long. They can hold the stock for long, but suppose somebody buys here at 377. The stock ends up falling. He cannot afford this fall because it's entirely possible that his livelihood depends on, placing further investments based on that same capital that he has. An investor might have multiple chunks, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Even if the 10th investment failed, he still has 9 other investment. A retail trader, on the other hand, he might only have this one investment and he's trying to work off of this one investment that he has. So he's immediately going to sell. He's not going to take the risk of actually holding and waiting. And he creates a big move like this. So, this is retail participation. In a sense, if we look at daily is not very clear, unfortunately. Can I make it? Okay, we can make it smaller. So daily is giving you a lot of big moves. Tesla went till 483 in 2025. Interesting. And then dropped to 216, then rallied. Anyway, the point I'm trying to make, and on the other hand, institutional ADI, institutional companies are a lot. If you look at these one-day movements. It's very slow. It needs some major catalyst to actually move the stock. This is institutional ownership of 89%. Why? Because they are very calculative, very calm, collected. They're moving more on the fundamentals and less on the fear and greed aspect of the market. So when we trade any company with high institutional ownership, we aim for a subtle, slower moves. Like I think recently we traded FDX. Let's see, what's the institutional ownership on FDX? Wow, what is up with the net? Hmm. 77%. And if you see the ATR will be 5.46, not bad actually. So, and FDX we traded, I think recently. My brother traded, and yeah, 1, 2, no, not this. Bounce and then rally. Yeah, this. So I mean, the stock is very like. Clean is not the right word, but very stable. It's not in a rush. Every like bullish move is then countered with a slight pullback. The moves are slower. It rallied all the way from 216 to 226 on a slow tone. The tone or the pace is slower, for, so to speak. Tesla, on the other hand, it'll do the same. This one was consolidation, but on a day that Tesla moves, for example, it's not it's very fast. It's very panic driven. You can like see the panic in this move. FDX on the other hand, like compare the way they moved. FDX, every time it goes up, comes down, then it goes up, then it comes down. Every level was like revisited twice, except this area maybe, but even this was visited twice. This it went up, then it came down, revisited, went up, came down, revisited, then decided to go up. So every move up is fueled by some level of level-headedness. It's not panic driven. Went up, then came down, decided that okay, it needs to go up, and then continued moving up. Then it came down, decided to stay above this low, and then it finally opened high the next day. And whatever the story of the stock developed, but we can see that the development is very calm. It's not very panic driven. Tesla, on the other hand, sometimes shows moves that is very panic driven. So the way you trade a stock like Tesla and the way you trade a stock like FDX is different, because think of FDX as the long-term participant. He is the one that you are involved with. And when you are dealing with Tesla, think of him as the dealer. So this is the party that you're dealing with when you trade Tesla. This is the party that you're dealing with when you trade FDX or ADI or stocks like that. One anomaly that we have found is Adobe, actually. Adobe has very high institutional ownership at 83%, but Adobe's moves have been very random. Actually, let me show you on TradingViews. You can even see my chart work. So you can see that in the past year, Adobe has really jumped up and down trying to battle this AI. Adobe makes a lot of softwares that AI might replace, so there is some concern regarding that, even though Adobe is very well positioned, making good money and everything. People have concerns regarding the future. So Adobe, although slower, this is the daily, it's, you can see that the stock is trying to look for new value areas. If I didn't know any better, I would think there's a 5-minute graph, because this is how 5-minute graphs generally look. This is not how one-day graphs look. But you can see there was a value area established here, and then Adobe went in after good earnings came out, or maybe the earnings report. It tried establishing a new value area above 450. But I think after this earnings, a value area below 450 was established. So, and then after I think this earning, an even lower value area below 400 was established. So, I mean, you can see that this stock tries to stay or trade in a predictable path. It like sticks to the value area. It sticks to. It's not very erratic. It's very calm. It's very controlled. Depending on the company's performance, the price is reflected in the stock. People trade. Some days the moves are not very big, very very puny moves, like small moves. If you see, Tesla won't have any small moves like this. Like it has, but you can see many many big moves as well. Like many many big moves compared to small moves, or like a cumulative or accumulation of small moves, or cluster is the right word, cluster of small moves only in this segment, after which the stock exploded, like just boom, it went up. So, and there is no other cluster of small moves. Tesla, on the other hand, it can identify this as a consolidation area, as a potential value area. Then it drops down to from 350 to 330 area. This was the consolidation. It decided to drop down till 275, for example, or the 280 area, the previous consolidation. Then again, it goes back up, identifies new consolidation area. So, like, you can see the fair value change from here to from 350 or 340 to 280, and then it moved back up to 320. So, I mean, you understand, right? This is dealer behavior. Let's just coin the term dealer behavior. This is dealer behavior. We're not interested, or we might be interested in dealer behavior because that gives us more opportunity, but it can stop you out. It can lose you a lot of money as well. So it's important to be careful. So I am planning on analyzing every company based on this, based on what I'm supposed to expect from the company, develop a story behind who are the owners or the shareholders of this company, and what do they expect from this company, because it might give us a hint towards future direction of the company. Just something we can keep in mind. For example, if Adobe is battling, I'll make a proper video in the future regarding this, but suppose if Adobe is battling AI replacement, and we'll keep an eye out on the news regarding Adobe's AI, how it incorporated AI into its softwares, and how is it like trying to appeal to a larger audience, trying to simplify their software or something. I don't know. That is Adobe's problem, not my problem. But if we hear any news like that, and if the market shows any reaction, then yes, we will try to trade bullish on Adobe. We'll try to make some money there. So every company has a story, and you will try to decipher some of the stories based on this concept that we have understood and learned, based on this, that based on this dealer seller customer theory. I need to name it something. I'll think of a name in the future. But yeah, for example, for now, this is going to be the basis of future playlist. I mean, the future of this playlist. I'm going to try and analyze every company based on this specific concept, and post my analysis for every company. Let's see how that goes. I hope it goes well, inshallah. Wait, can I copy this? This would be really nice. In this case, both. Okay, wow, I can copy this. Although not perfect, but I can copy it. Why did Notepad open up? Anyway, so I'll stop the video here. Thank you so much for watching.